This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of the show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Christian Kameir, managing partner at the venture fund Sustany Capital. Sustany is headquartered in Newport Beach, California, and invests in fintech, Web3, and blockchain-based solutions. Christian, thank you for joining us.
Thanks for having us.
So let's kick off and tell us more about your background, where you came from.
Yeah, so I started programming in the early 80s. My first computer was a used Commodore 64 with a tape deck for data storage. I later interned at Siemens, learned to code ERP systems and other database solutions, and went to school to get a degree in linguistics, studied some natural language programming, but then went to law school. And while I was working on my doctoral thesis, I joined a startup as their in-house counsel. We were trying to build a unified messaging system on the AOL backbone back then in the very early 90s. Well, ahead of its time back then, but later became an executive and legal counsel for one of the first private internet service providers in Germany, which we sold at the height of the .com at 270 million euros at the time to what's now the largest internet service provider in Europe. And so I retired from the law in 2000 and moved to Southern California, joined a technology venture fund in San Diego. I did this for 4 years before I felt the urge to run my own startup, did that for 5 years before we sold that in 2009. Moved into angel investing after that, discovered the Web3 and blockchain space. And then with that, I ran into my now partner, Carl, who's listening in because he created some of the blockchain meetups here in Orange County in 2016. And so we discovered pretty quickly we have the same philosophy, outlook, and approach to technology and technology investing, which in our case means we're applying the scientific methods as much as possible to that topic. So yeah, and a few years later, we formed the first fund on the topic in 2018. And at the moment, we're raising our second fund.
Great. Well, tell us more about your fund. It's in the area of Web3 space and what it's all about.
Yeah, so, we're using the term Web3 somewhat reluctantly. It's a term that's been around for a very long time. It first came about in 2004 and first peaked in 2008. You can find that when you go on Google Trends. So, and it's a little bit misleading because it's kind of suggests a linear development, but we really see this as a paradigm shift. What I mean by that, if you look at the big picture here, we developed database solutions only in the early 60s, and we spent kind of 40 years transitioning global economic activity to these digital solutions. And then we spent another 20 years developing network technologies, so connecting these databases. And in essence, what we're doing right now in what people call Web3 is kind of mitigating against the damages from that. What I mean by that specifically, so the legacy data protocols lend themselves to the transfer of data. The Web3 protocols lend themselves to the transfer of value, where right now you still have to have middlemen. The typical example would be a bank. You're really sending a message to a bank. They're not really payment systems, they're messaging systems. And then the bank will adjust your ledger and then consequently the ledger of a person that you're sending funds to. So you're always subservient to someone maintaining these data silos. And that's just one example, but there's unlimited examples. Essentially, every time you have a database that's controlled by someone else, you will see that aside from data capture, there's some value capture there, which is a lot of friction. We can divvy these out.
Great. Well, as you look at the Web3 space, what do you see as the main opportunity?
Yeah, the obvious ones are two. One is disruptive finance. Those are the legacy financial system in 2021 created about 22.5 trillion in revenues. And that's in the context of only 96.5 trillion in global GDP. So your napkin math would tell you that financial services take about 23% out of the real economy. The metaphor I usually use for that, it's kind of the equivalent of us putting a stamp on every email that we are sending. So everything that you're buying is inflated by these intermediaries by at least 7%, typically actually more. And the second bucket, that's the bucket we would label with Web3 primitives, is really when you look at the internet landscape today, you're basically moving from one platform to another. You're not really ever on the World Wide Web. You're either on Google's platform, you're on Facebook's platform, you're on LinkedIn's platform. So it's one step away from AOL's walled garden back in the 90s, right? When you were on AOL, you were not on the World Wide Web. And I would argue, if you're on Google, you're not on the World Wide Web, right? You're a non-player character in a game called Google. And so that opportunity, we estimate, is probably 13 trillion to take these intermediaries out of the system and take the friction out of the system. So Google, for example, and that's my typical punching bag here, is not really a search engine. If you look at the DNA, it really doesn't index the World Wide Web. What it really is, it's an organization that sells social engineering as a service to the highest bidder. It's not interested in giving you necessarily the best result because its main mandate is to increase shareholder value. But if you want to simplify this massively, so we need to fix all these bottlenecks. So that's access to internet. We need to decentralize that. It's bandwidth. It's addresses, most importantly. Right now, you're relying on very few middlemen that can disenfranchise you in that context. And so you have what we actually feared for a very long time. We basically have a splinter net, right? So where your internet, depending on where you are, might be very different from what I see. So that's not the real World Wide Web. So there's unlimited opportunities for people who understand this paradigm shift. And if you want to simplify this further, you could say that we are moving from what is kind of this push paradigm, where a Web 2 company is pushing content in front of you, to a pull paradigm where you can pull in the content that you actually answers that you want. We have lots of examples, obviously, now, but there's lots of work to be done.
Great. And so what is the challenge in starting a Web3 business in today's market?
Well, investing is all about timing, and investing your time is also all about timing. And so in the context of technology specifically, you have to understand how these technologies come together. The obvious example would be, before YouTube came around, there were probably 100 startups that we looked at the time that were trying to do file sharing, video file sharing over the internet, but there wasn't enough broadband adoption. So they didn't go anywhere. So once there was enough broadband adoption, YouTube took off. So if you're building a startup in the space, or if you're investing into a startup in the space, you need to understand how these building blocks are coming together. What are the forcing functions to adoption? So on one end, you can look at this from the adoption of the developers themselves. So we have an investment in companies where we see that developers find these useful and they're adopting these tools. One example would be the Graph, which is a blockchain indexer, and every decentralized applications are using that. And or where there are certain government forces. And my go-to example here is, if you have an iPhone and you pull that up and you look at the default wallet that is installed on your iPhone, you will see that there's 3 states already that can let you import your digital driver's license. This is a cryptographic primitive. So the point here being is, once you have these government-led solutions that set a certain standard, there's a particular ISO standard, it's non-optional for a startup to be able to integrate with that. They cannot avoid that if all of a sudden we don't use plastic cards anymore, but you're using a cryptographic primitive that you have to handle in a particular way. So we look a lot for these forcing functions, and once you understand those, it's much easier to make decisions, not only what to invest in, but also what you should be developing.
And so what's the potential reward in starting a Web3 company? What do you think will come of it?
It's unlimited. So I really look at this from the perspective, we're building the World Wide Web for the first time. Really, I think we are pre-Web 1.0. What I mean by that, you're never on the World Wide Web right now. And a lot of teams jump to very complicated solutions where it's really about on and offboarding database solutions of the past. And my go-to example here is always the same. Whenever I get a piece of paper, for example, or see a piece of paper that's used to facilitate real-world economic activity, I'm thinking about, okay, shouldn't this be a cryptographic primitive like an NFT? When I go to my dry cleaner, I get a piece of paper, I get this receipt. And I think, okay, that should really be an NFT and would have all these programmable advantages at that point in time. And so once you start looking around with this particular knowledge, with this particular lens, you will see these opportunities everywhere. And there are specifically like examples in the supply chain. Almost half of the supply chain data today is incorrect. And that has to do with a missing layer of data integrity, data control, data security, because it comes back to what I said earlier. Right now, we're moving data from one data silo to another. So the manufacturer has a database and will send maybe a PDF attached to an email that accommodates whatever wares are being transferred in meat space. And at some point in time, something goes wrong with that. Someone puts in the wrong value and someone doesn't move a pallet or something else. And we can fix that today. We have been looking at these solutions for some time. They are slow to come. And most of the time, it's actually not a technology problem. Most of the time, it's an incumbent problem because there's value, obviously, for incumbents to maintain these data silos. I mean, the obvious in the United States would easily be accessible to anybody is like the multiple listing systems. This doesn't really have to exist. But there's entities that make profits for maintaining those. And there's many, many other spaces where that's exactly the same. So you can look at this in a bifurcated way, and we do, to where either you're trying to fight an incumbent, so you better be prepared to raise a lot of money and fight it top down, or you go into a place where there's no infrastructure. So what we observe is something like, if I don't have a land registry, and I have a country in Africa that's establishing a digital land registry for the first time, that should not be a database solution. That should be a solution using mapped cryptographic primitives and the principles of non-fungible tokens for data integrity, self-sovereignty, and otherwise security. So in short, unfortunately, because as you know, reality doesn't have an advertising budget, everything that you read about the space of quote-unquote crypto is usually some motivated reasoning leads a lot of people to believe it has to do with cryptocurrencies. It has to do with cryptography, which at the core is about data security and integrity.
And so what's the outlook for the market? How soon will we see the benefits of these solutions?
Yeah, it's one of those first gradually, then suddenly. So what I mean by that is, so we got a number of different forcing functions in our space. I mentioned earlier, these cryptographic primitives that US states are already issuing right now, or you have other forcing functions like some countries rolling out their own central bank digital currencies, and they will reap these efficiencies right away. As I mentioned, the friction from the legacy systems, from the legacy financial system in particular, is tremendous to an economy. So once you remove that in one economy, then the adjacent economies have a huge disadvantage and need to follow. And the other part is just simply that the efficiencies across networks lead to network effects, to where we already see that some of our portfolio companies are aggregating the legacy providers to then implement more efficient solutions for their own back offices. You can think of something like supply chain financing, which is really, really difficult and long process right now. And one of the companies that we've been monitoring for a long time can reduce this process by 90%. And so there's examples over examples. Once you understand the primitive of what we're actually solving for, and as I said, in very simple terms, you can think of this, we're solving for the database problem.
And so what's the differences between you and your competitors in this space?
I probably would point to 5 things. So we intentionally spent almost 6 years of thesis creation. So understanding timing, as I mentioned, being too early is the same as being wrong. And oftentimes when you hear VC talk about thesis, they really mean a theme. For us, it's not a theme. It's a really academic exercise, scientific exercise. We assume that our thesis initially will be wrong. We're looking to invalidate this. So we ran these theses by probably more than 2,000 people over the past 5 years and refined it on a daily basis, and we still do. And then secondly, we spent the last 7 years developing a network. Our space is driven by the open source community, which works a little different than your typical startup community, as in there's a lot of collaboration across countries. There's particular locations where communities aggregate around certain topics. You got to be able to read a GitHub library and who is driving development, for example. And then thirdly, we spent 5 years building an investment pipeline. We don't invest in dots, we invest in lines. And we raise money because we know where we're going to allocate these funds. We don't raise money for the sake of raising money. Fourth, we built probably the most sophisticated due diligence framework. So the quality of answers depends entirely on the quality of questions you can formulate. So the consistent feedback that we get from startups that we interview is that the depth of the discussion is far greater than they ever had with any other allocator and often even other developers. And then lastly, number 5, we actually validated our thesis. So where we put our money where our mouth is and invested in 10 startups and got a 10x multiple out of that. So actually it validated this thesis, not just build it.
Great. And so what advice would you give to someone entering the Web3 space?
Yeah, so it's interesting because the space, as we describe it, exists at this intersection of very different disciplines, right? It's largely driven by engineers, but then from a disciplinary perspective, we're trying to code legal and economic concepts. And so the first thing you want to do is to learn the specific language of the discipline. Every discipline has its own language, has its own taxonomy, and that's where a lot of these teams today fall short. One of our standard questions is always, what is the function of a blockchain? If you can't understand the function, it's very difficult for you to deploy that correctly. If you don't define things, and we see this a lot, that developers will create a metaphor. My typical one would be a digital identity. What's a digital identity? That's a metaphor. You cannot code on metaphors because computer software is deterministic. So it can only actually integrate with real world reality. So you need to be able to understand legal concepts. You need to be able to understand economic concept. You cannot just leave this to a computer engineer. So it's a very big hurdle. And unfortunately, what we've seen over and over again is where these teams seek legal advice. The legal advisors don't understand the technology well enough. And what happens is a legal advisor will explain the letter of the law rather than the objective of the law that a coder needs to be able to implement in this technology. Typical example would be KYC. Well, you need KYC to prevent money laundering. In the case where you're a financial service provider, what makes you a financial service provider is if you, at any given point in time, are a custodian of these funds, if you have control over these funds. So we're using voice over IP right now, as you mentioned earlier, and the service that we're using didn't get a telecommunication license. So the point of that is, if you deploy the technologies as intended, you shouldn't have any regulatory exposure because you're just a technology in the middle, but you don't know what's being transferred ideally. It could be voice, it could be text, it could be currency. But if you implement this correctly, then this should never be a problem.
Great. Well, as you explored the Web3 world, what's one thing you found that you didn't expect?
Well, the amount of teaching required in our space is tremendous. So I just kind of spoke a little bit of that, but there is not enough education right now around these concepts. So we're actively driving with different universities towards education in that space. So we're actually working with Harvard and other universities to build formal, what we call legal engineering curricula. We developed our own GitHub library that developers can copy over to get just the most fundamental terms correctly for their white papers, for their design papers, so that don't either have nothing, which we see a lot, or that they have something that's actually legally not correct, right? So if I cannot distinguish between authentication versus verification versus certification, then it's going to be very difficult for me to create an application that actually facilitates that particular legal outcome. So to that extent, we participate in a lot of different working groups. I chair the Banking and Finance Special Interest Group at the Decentralized Identity Foundation. I'm a board member at the OTA. We set the data exchange standards for the travel space. 90% of the hotels in the world are using that standard. So it's very important to understand the existing network topology, because often you have to be what we call backwards compatible with that, as in unless you understand the ultimate output, which could be something obscure like an edifac, which is a format used by telexes, and you don't know that these formats exist, well, no one in that space can actually adopt your solution. And so that's what we teach on a daily basis, or we ask for on a daily basis. And oftentimes there's a blank stare, and we'll put the company in our database and tell them, okay, come back when you learned the topology and figured out that particular integration, that particular problem.
Great. Well, what online information source do you find most helpful in your work?
Yeah, unfortunately, as you know, one of my favorite sayings is reality doesn't have an advertising budget. So most of the things you find online is some form of motivated reasoning. So really, we get most of our information from the primary developers. We interview teams daily. We look at the actual output rather than kind of secondhand knowledge. We have our own data science team that aggregates data. We run our own nodes. We're really part of the ecosystem. And my discussions are typically very diverse. I run a couple of podcasts with diverse views from technologists, policy and legal experts. We're doing a large interview series right now with foremost economists around the world. So we find this much more useful than kind of following the news, but actually talk to people who have influence in the space, who are building things in the space, and who actually direct what is being built rather than report on what they think is being built, which almost always really is false in many different ways. If you just analyze these articles just using logical reasoning, logical thinking, you will see there's a lot of cognitive dissonance, specifically in kind of this legacy VC world. Because as I mentioned earlier, it's not very helpful to look at this topic from a linear development perspective, Web 1, Web 2, Web 3, because most of these Web 3 solutions are really disrupting Web 2. So if I have a portfolio of Web 2 companies, I'm not going to disrupt those. If I build decentralized Uber, but I have in my portfolio Uber as a company or something similar to that, I'm going to be very reluctant to invest in a project or company that's going to disrupt that particular model. And if you pay attention, you see that quite a bit today. And again, comes back to being too early is the same as being wrong. There was a lot of money allocated to things that we thought was way too early in the past 18 months specifically. And I think over the past 6 months, we've been kind of proven right or seen the outcome of that.
Well, great. Well, you see a lot of new technologies and new business models in the Web3 world. If you could start a business tomorrow in the Web3 space, what would that business be?
Yeah, I mean, it's bifurcated. It depends on what is the capital that you're starting with. If you bootstrap a company, you want to probably focus on something very simple, a very simple problem, like the earlier example, solve the dry cleaning paper business, right? Create a very simple dApp, decentralized application that solves for that piece of paper, offer that dApp for free, and then create value on top of that. If you want to tackle incumbents, let's say you're in the United States or in other developed nations, then you probably have to be prepared to raise a lot of money first and start top-down development, often maybe get licenses if you want to be in the money transmitter business or otherwise hold funds for others. So it's really bifurcated whether or not you're solving a purely technical problem that's very defined, or if you're solving a large commercial problem where there's a bunch of incumbents there that you have to contend with. But if I was going to do that, I would probably do the bootstrap startup and pick a very simple problem, develop it on the side, keep my job, and provide something that people just find inherently useful. And oftentimes you'll hear that people will say they kind of created this new standard. You don't create standards. Standards emerge by actual developers often adopting something. They just find it useful, right? So that would be a starting point. And then oftentimes you'll go to GitHub and you'll see, oh, there's many people that find this useful, that copied this over. And so there's utility for that particular application. So that would be my starting point. I would look through those and see, this is a very well-received topic. It solves a real problem. That's the other part. that I would pay attention to. I think right now where we are in this space is oftentimes kind of described as this multi-massive online player game where it doesn't integrate with real-world economic activities. And so that's what we actually look for. So we made an investment in an NFT-related company, but they use that principle for things like ticketing. So they don't focus on selling digital collectibles. They actually solve a real-world economic problem with pop-up events. So that makes sense, right? So, and specifically in times of recession, where people don't go for the things that are extra, but where people go for things that are necessary and save money, these are the technologies that you want to build.
Great. Well, in the last few minutes that we have, what else should we cover that we haven't?
Oh, there's so much. As you know, I typically talk about all of these topics that we touched on for 1, 2, 3 hours. I think the most important things to realize are twofold. One, we're really building the World Wide Web for the first time, so there's unlimited opportunities. Don't focus on marketing language and motivated reasoning. So don't look through things like Web3. Ask yourself, what are the actual bottlenecks? What's being solved for? And I'll give you one particular example to make this not obscure. So in the past, there was a marketing agency that specifically developed the term fintech. And then they labeled certain companies, the usual suspects like the PayPals of the world, the Zenefits of the world, with this particular label. The problem with that is that these solutions are really window dressing solutions to the legacy financial system, right? So ultimately, you're still integrating with some commercial bank. Point of that being is what people call things like decentralized finance today. That's really FinTech 1.0, or if you will, you can call it FinTech 3.0. So you want to understand these principles rather than going for the marketing terms. You want to learn the taxonomy of the space. You want to learn to ask the right questions. And you can only do that if you talk to the actual people that develop the technologies on the ground and build your own theses, right? You don't want to be indoctrinated in someone's ideology. I listen to both kind of what people will call like the Bitcoin maxis and the crypto podcasts, and both of them necessarily have blind spots. And you want to develop a diverse set of people that you can go to. That's what we've done for a long time. So we have think tanks around all these different topics because there's only so much time in the day, can only develop so much knowledge. So we have the good fortune now that within oftentimes minutes, I can just fact check certain claims that are being made towards us in a pitch. And I have the most knowledgeable person in that space can give me factual based feedback within the hour. So we don't have to spend days talking about a topic that ultimately is not yet timely and that will never come about. I mean, really the last thing here is we very rarely meet actual developers at this point in time that can explain the function of a blockchain, and they confuse blockchain and blockchain technology. So what I mean by that is that's a little bit like confusing internet technology with the internet, meaning I can deploy internet technology to build an application like a voice over IP application that we're using right now. Obviously, that doesn't mean that we're building the internet. So the same thing is true using blockchain technology, which is a particular type of encryption. So that doesn't mean that you're building a blockchain necessarily. You're using this particular type of encryption. Then there's really one singular function, as far as I see it, for a blockchain, which is to change control over a set of bytes from one address, so from one controller to another. That's it. And the reason why I formulate this in these stark terms is what we see very, very often is that people think of blockchain-based solutions as an alternative to a database. That's entirely wrong. So what I mean by that is you shouldn't store anything using a blockchain, because at that moment in time, it's highly likely you can no longer comply with certain laws and regulation. The typical example would be if I create an immutable record out of your first and last name, out of your personal identifiable data, at this moment in time, I cannot longer comply with GDPR in Europe or CCPA here in California, which requires you to, quote unquote, forget this data. you now have an immutable record in your system. And that's just one of the many, many examples. Comes back to, you need to understand the principles of the space. You need to understand the functions. You need to understand that when developers talk about these topics, they're using flowery language and metaphors. Blockchains aren't protocols. Blockchains are applications. And the reason why they are is because they're standing in the context of protocols. So actual networks protocols, they make use of network protocols. And the metaphor I usually offer for that is, it's a difference if I tell you that I saw a jaguar in the parking lot down here versus I saw a jaguar at the zoo, because one invokes the image of an animal, the other one of a car. So that's why it's important to understand when you develop network technologies, what are the functions of the network technology, so you don't use it in any other way that later on gets you in trouble. And so this is all part of our very, very advanced due diligence process that we apply on a daily basis here. And then we have the advantage of giving this feedback to teams who later come back to us and say, thank you that you pointed this out, we revised that. And that's what we started to see probably 2 years ago. These teams come back, revise their outline, revise their topology, and we get the benefit from that because we pointed to these inefficiencies rather than just saying, yeah, we're not interested in investing in that.
Well, great. Well, this has been a fabulous interview. How best for listeners to get back in touch with you?
Yeah, so I'm just chris@sustany.co, just .co, not .com. I publish very frequently on Hacker Noon, long nerdy things. I also publish on Forbes. We're also working on a book on streaming money. We also have our own GitHub library, so we help developers. We also have our own Skunkworks division here at the UCI Research Park, where we develop technologies. So we're really part of the ecosystem right now. If you're an LP, get in touch with us. We're allowing still a limited number of LPs into the next fund. We're somewhat selective about that, very particular. And yeah, if that interests you, we don't pitch. We explain things to you. And even if that's your only goal, send me an email and explain how we see the space. And hopefully you learn something from that.
Great. We'll include those contact details in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
That'd be great.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.